Hello, everybody. Welcome back for another video. Hope you're all doing great. Hope you're all doing well. Hope you're all taking time to take care of yourselves as we float through this ever more dramatic market, because it shows no signs of letting up its dramaticness. And without any further ado, let's jump right into it. Recently, Bank of America released a report describing where people are putting their money. I bet you can't guess where. A recent Bank of America report shows that younger, more affluent individuals, bougie word, favor crypto and alternative investments. Differing from older generations' traditional focus, they said, in fact, the most conservative group is holding the highest average exposure to crypto, the bank has said. We see this more and more all the time. I mean, and this is why I think a lot of when I ask you what you talk to about your friends, and if you're talking about crypto and stuff like that, I want to say I was going to say nearly, but I think every person I know who invests has crypto in some form or another. And I'm combing through. Everyone either has some crypto or it makes up a huge portion of their portfolio. There were studies done years ago as to why so many more young people, if you will, are in the cryptocurrency space, and it comes from the idea of being digitally native. If you grew up with the internet, if you grew up with a smartphone and a tablet, you're used to seeing numbers and things online as opposed to actual physical money. You're not really used to holding a $1 bill, a euro note, or some yen in your hand. You're used to things being online, being more digital. So you have an easier time understanding that value can also be passed online, as opposed to having to go to a bank teller to withdraw money or going to an ATM and all those other kinds of things. Bank of America released a report titled 2024 Bank of America Private Bank Study of Wealthy Americans, highlighting notable trends and examining how generational dynamics, and this says the upcoming wealth transfer, we're currently going through the wealth transfer, are shaping financial strategies. Don't be confused and or lied to. We are witnessing the wealth transfer. There are multiple wealth transfers that usually get discussed. The more popular one has to do with and I air quote here, from the boomers to millennials and or to Gen Z. But the problem actually is that what we're witnessing is currently the movement of wealth quite rapidly in front of us. It has to do with wealthy individuals buying up an enormous amount of stock. It's something that you won't actually see with your own eyes, but according to data, we see that basically wealthy families and individuals are making sure that they hold the largest portions of these companies, of these institutions, of the banking stocks as well. They basically want everything that there is. Same exact thing in the cryptocurrency space. When you talk about the amount of crypto being held by wealthy individuals, for those of you who were missing it, a couple of days ago, the Ethereum whale wallets, they're growing constantly because they realize that while you can create Ether, Ethereum also has a burn, and it is also therefore deflationary. So they're buying up as much as they can because only people who hold Ether can create any Ether in the future. It's the same thing with Bitcoin. It's the same with every other coin. We see this in the housing market. There's a reason why these companies and institutions are now buying up all these homes, all these apartments, all the condominiums. It's not about a future wealth transfer as we see people who are in their 60s and 70s go to 100 years old, if you will, and then pass on that money. No, it's happening right now. This is the significance also of you hearing that a couple of companies held, if you will, through the ETFs over 1 million Bitcoin. Like it's constantly refocusing over and over and over to this idea that no, it's all taking place right now. And this is why, my opinion, it's very important to be in some type of an investment vehicle. Like I said, I have a lot of friends who are like, I've almost like forced years ago to buy some crypto, and now they're happy. But there are people who do feel happier and more comfortable holding stocks and other things like that. And I keep saying, as long as you're invested in something, because the people who are holding the assets are the people who are going to benefit. If you hold nothing in the future, forgive my French, but you are going to be very broke in the future. You're going to have a very, very difficult time, even more so than right now. The report highlights that younger, affluent individuals are considerably more inclined to invest in cryptocurrencies compared to their older counterparts. These young investors tend to favor a diversified portfolio, allocating a significant portion to crypto assets and alternative investments as well. Alternative investments can be, and I mean, Pokemon cards, comic books, sneakers, you name it. There's a whole different generation of things that they consider to have value. There's also like a huge uptick in young people who are also getting back into sports cards. The sports cards world is absolutely ridiculously crazy on how big that it is. But it's big, and I'll explain a little bit more as we continue to go down. But this is a huge reason why you see such a huge shift. And I mean, if we can be completely honest, it even says it here. The approach contrasts with the traditional focus on stocks and bonds, typically preferred by older generations. Now, this is from my vantage point. The problem is that older people, and what have you, they were lied to for a very long time that the only way to make money or to secure money was through very safe, very stable investments. So any other company, any other institution, any other whatever that made an enormous amount of money from the late 40s, early 50s until around, I want to say mid 80s, when the entire banking shift kind of happened and people were, greed is good, like that kind of idea when everyone began throwing money into the markets. People were discouraged before. You know that the housing market wasn't considered an investment strategy until the very early 90s. Not even the late 80s. A lot of housing ETFs didn't appear until the early 1990s, where people realized, not a joke, hey, you can't build forever. That city has a border. That's where that city basically ends. Any real estate that is bought here is going to continue going up in value. And that's when housing actually became, to the public, a relative form of an investment strategy. But through the 50s until the early 90s, or like very early 90s, there were a number of very wealthy families who were buying up all this real estate. So the other generations before us, if you will, were told, buy stocks like very, very, what do you call it? Like low dividend stocks. These are the safe ones. Buy gold. Gold is, really secure. It comes out of the ground. Like, this is where a lot of this mindset comes from when it comes to these old investments. I remember being younger and my grandmother had a lot of bonds. She had a lot of bonds. It's because that's what she was taught. You put $100 into something, and in 5 years, you get back $105. It's safe and secure. And I know someone just rolled their eyes. The idea of waiting 5 years and getting back $5 is terrible, because we know how we have more of an understanding now as to how money is made, how money can be made quickly, and what kind of investments can get you the return to put you far ahead of inflation. So basically, once again, I watch a lot of documentaries, news stories. I watch all these different things. And this is a lot of times why when I tell you that I watch the documentary and it's sad, but they show these people, like usually older people who should have retired. They're 74, sometimes 81. And they're asking them why they don't have any money. They were never told to save money. That generation would and if you were told, it was like, have some money under your bed, buried in the backyard. It sounds insane, but this is literally what it was. Have some money in a bank account, but not too much, just in case that the bank went belly up. We didn't have the idea of like FDIC insurance for as long as we have. And even when we started getting it, people still didn't actually trust the banks as, well, they shouldn't have. around the world. So this entire idea was you don't really need to buy a home. You can continuously rent. So when you see a lot of people who like bought homes in the 50s and 60s, they typically owned one home. It would the idea of it as an investment simply wasn't a thing. So a lot of the people who are in their 60s, 70s, and 80s who are trying to retire or could have retired, they typically don't have a lot of money because they were told, no, buy government bonds, buy some gold. That'll definitely set you up for the future. So they might have bought 1 ounce, 2 ounces when it was $300, and now they have $4,000 for investment or for retirement. Is really insane to think about. So even a lot of times I see people talking or discussing how, if you will, financial YouTubers or even people talking about finance on Instagram or TikTok, how like they, what's the word? They kind of discourage it, saying, you know, these people shouldn't be talking about it. But I think we need to talk about finance. We need to talk about money. When I was growing up, if you can't tell by my accent, I grew up in the States. And the issue is that we were always like discouraged from talking about money. When you got a job, you were discouraged from asking other people how much they were making. Like money is always a very like a hush hush thing. You can hear about money from rich people. Rich people can brag about how much money they have and how many boats they have and how many homes they have on every single TV show. But between you and your friends, it's meant to be like a secret. You don't talk about it. Like you keep it to yourself. So there's never a discussion of, is anyone ready for retirement? In school, you're not taught how to save. You're not taught. I remember I had like a financial class, and you know, maybe, and I was quite cynical for a number of years about this, but maybe the guys really tried his best. I don't know. But I remember he was teaching us about stocks and stuff like that, and it was so abstract to us. And every time that we would try and ask a question, he would tell us to put our hand down. Like we had to just simply absorb whatever he was asking. So finally, one time I remember asking him, I remember clear as day, I was asking him a question and I said, hey, you know, everyone's really into Apple right now, you know, the iPhone, yada, yada, yada. And I was like, should we be buying Apple stock? And I remember seeing the price like on the computer, like how low it was. And he was like, yeah, but you got to watch out because like there was, and he like basically told the whole class, like, no, if you're going to do it, like stay to like really safe things. Like there was no discussion except for what he had to say. So even that like finance class in high school was also like stunted. Like, you know, there was no real growth from it. Whatever he said, we had to absorb. We had to write on a piece of paper when we had the test. We had to hand in the test, get a grade, hope that we got it, and then we graduated. There was no extra discussion around it. It's very important to talk about money. Like I understand that money should not be the center of, you know, of the universe, of the world. However, we happen to live in a world where it is the center of a lot of things. We see that people can't retire. You want to retire. We see that people have no money. You want money. You need money. You want to buy stuff. You want to be able to relax. You want to be able to retire early. You have to have these conversations. Last point, there's a really good, I have no idea how to find this video for you, but I'm certain someone has seen it. There's a video that I saw circulating on Instagram. And it was this mother, I think with her 4 kids. I think 4 kids. They were sitting at a table, like a very long dinner table. Like so it's a real video. It's not like fake. And she's showing her kids through her Instagram channel, whatever, page, how to like learn about finance. So the kids range anywhere from, I want to say literally like 6 to maybe like 15, 17, somewhere around there. And she gives them a budget. And in the video, it's so crazy because she goes, okay, you all have a job and your job is giving you $2,500 per month. And the kids have to write down $2,500. She goes, okay, you have to pay for your rent. You have to pay for your insurance. And she goes like through multiple different insurances. And she goes, you have to pay for a car. If you don't want a car, you have to have a bike. If you don't have a bike, you have to have a train ticket. You have to pay for new clothing every month. You have to pay for food. You have to pay for, if you want to watch TV, you need to pay for Netflix. You need to pay for this. You have to pay for your, and she has everything completely laid out with prices like on a chalkboard. So her kids are writing down all the numbers and she goes, okay, now add all these numbers up. And the numbers come out to, I mean, somewhere along the lines of like $2,400 per month. And one of the kids goes, I don't have any money left. And she goes, exactly. And she goes, and so then the kid goes, but that's not fair. She goes, exactly. She goes, so what's the answer? She goes, you have to literally find a way to make enough money to be able to even have money left over to save. One of the other kids goes, and realize is I don't have any money to hang out with my friends. How do I go on a vacation? So some of the kids start like Xing off like, okay, well, I won't have a car. I'll have a bike. Because that's they're literally going through this idea, but it's so like it gets the mind working. It's so important. You have to talk about money. You have to let people understand even around you, like ways to save, ways to have stuff in the future. I know far too many people who now don't have jack diddly squat. It is crazy. And I mean like in their late 20s, early 30s, early 40s even. And don't have nothing, not like nothing to their name. And anytime I bring up finance, it's always like an eye-rolly moment. Like, why is he talking about this again? And this is, anyway, the Bank of America said older investors hold a lot more traditional equities, while younger groups hold more crypto and more alternative investments. According to the report, 3/4 of younger people agree that it's no longer possible to achieve above average returns with stocks and bonds alone, compared to just 1/4 of those Gen X and older, similar to 2022 findings. This belief drives them to explore alternatives such as cryptocurrencies and private equity. There are a lot of videos going around, and I mean, if you just are, if you have a brain and can read numbers, they ask younger people a lot, why are you investing in sneakers? Sneakers doesn't make any sense. Why are you investing in Pokemon cards or in sports cards? And then the younger people will look in the camera and they go, because a 2-bedroom is $780,000. They go like, what it would take for me to save up 15 to 20% for a mortgage and then be locked into that for a very long time. And I've seen so many countless things where people are like, young people are lazy now. And it's like, Mary, you were able to buy a home for $58,000. If you were in the 80s, you might have gotten a home for $118,000. Like everything is so much more expensive. So when they talk to these people, they're like, listen, this is the only way that I can figure out how to make money. I refuse to be locked into a 30-year mortgage that I also can't even pay for, that the interest rate might rise for as time continues going forward. But you do see there are people who are buying sneakers for $150. A couple years later, they're reselling them for maybe $2,000-$3,000. It's not whatever, but it still adds up. This is the other way. So all I'm saying is like, don't knock other forms of investment, because we're also in a very weird niche market compared to anything else that has existed for a very long time. Yeah, I'm not surprised by any of these findings, any of these numbers. People are figuring out that hopefully they need to invest. They need to put money away. And I mean, if we can be completely realistic, the returns from crypto, you need to be in the stock market for 10 to 15 years, or you have to find one exact stock that is going to do well. You can have great hindsight and be like, well, if you had invested in Nvidia, did you invest in Nvidia? Did you buy Amazon in 2001? Were you buying Apple stock in 1993? Hindsight is, of course, 2020. When you look back and you go, well, that was the stock to buy. Tell me what stock right now is going to do 15,000% increase in the next decade. Anywho, yeah, that's the study of wealthy Americans by Bank of America. We used to get a lot of these a number of years ago, but they were always kind of like fringe-esque. They used to announce that people were into crypto, but not a lot of people. Not a lot of people to actually like think about it or even be like concerned or worried. But like, of course, everyone's jumping into the market, or at least a lot of people are, and a lot more people will be over the course of the next 12 months or so. Yeah, that's the what people are doing with their money news. And yeah, let's move on. So I'm coupling this in the news that we've had over the course of the last week as well. Why aren't this? How come that? Is this happening? You'll understand in a couple of seconds. So a lot of people keep trying to find a reason in the news as to why Bitcoin's not at $700 million right now. We've had nearly every explanation in the book. However, this one made extra headlines. A lot of people assume that this was the actual reason for any mega dips that we've been having. And once again, why Bitcoin's not 6 figures on its way to 7 figures. It says over the past 2 weeks, long-term Bitcoin holders and people who mine Bitcoin have emerged as the largest sellers of BTC. These groups show little sign of new demand, according to a report by on-chain analytics firm CryptoQuant. Also in the news recently was the German government, a wallet that was marked by the words German government by another company that was not the German government, deposited their coins onto a crypto exchange, and people said that that was also the reason for a decline in price, which also makes no sense because the ETFs have also seen the outflows while we've seen a huge amount of whale activity as well. So, I mean, mega long story short, anytime that there's been a sell-off of any kind and prices have gone down, there's also been an equal amount of bought the dip news by whales. So whatever got sold off also got repurchased by other people who were on the market as well. CryptoQuant's monitoring of Bitcoin wallets revealed that whales, a term used to describe whales, have disposed of over $1.2 billion worth of Bitcoin in the past 2 weeks. Sales were probably made through intermediaries rather than on the open market. The news that we had about people who are mining Bitcoin, for those of you who missed it, is that, oh gosh, what was it? I think they hold, I think it was that they held, I think it was 1.95 million Bitcoin, like all the crypto miners around the world. But I think that number became 1.90. So 0.05 of their Bitcoin had been sold off to keep the lights on. That was also touted as news as to why Bitcoin was dropping. Bitcoin has it is over $1 trillion market cap. And this will sound silly, but selling off 1%? No, it's less than 1%, is it not? It's less than 1% of how much Bitcoin there is out there. If $1 billion worth of Bitcoin got sold, 100 billion would have to be Bitcoin's market cap for 1% to have been sold, but Bitcoin has over $1 trillion market cap. You understand what I'm saying? The news that we keep getting is like someone sold $80 million worth of Bitcoin. Oh my gosh, Bitcoin has to fall by 4%, or this is why Bitcoin fell by 4%. Even $1 billion worth of Bitcoin isn't even 1% of Bitcoin's market cap. It would logically have no actual movement on the price. We would see a movement down, but nothing as dramatic as people keep saying or how they're actually talking about it. I think you should be able to see almost this. I tried reformatting this website, and every time I did it, this like area also reformatted to be the exact same size, so you can't see over here as well. The point is, we're basically roughly around here as far as like long-term holders. There was a dip right here, and then we got right back here. Actually, we're up above this all over again. So people keep pretending that we're somewhere around here, that no one's holding any Bitcoin, that all the Bitcoin just keeps disappearing with the amount of people holding Bitcoin. And it's like, no, we're totally fine. These numbers are totally okay. And in case, anyone had any question about any of this, for those of you not looking at the screen, Bitcoin whales purchased $395 million worth of Bitcoin amid price stagnation. This is also over a 24-hour period. So we are in a bit of a tizzy, bit of a whizzy, bit of a weird situation where we keep getting news, or have been getting news in the last 2 weeks, that there have been outflows for the ETFs, or that this government is selling, which is also fine. That at some point the governments might sell their crypto, right? You know that there's a point sometime in like maybe the year 2045 where Michael Saylor might actually use some of his own Bitcoin, right? People keep pretending that like governments, organizations, and companies are supposed to just buy and hold Bitcoin forever. You know, if Bitcoin goes up to $17 million, you know that they're going to start using their Bitcoin, right? So everyone keeps getting really scared or telling other people to be really scared if people use their Bitcoin. We've had a tremendous amount, I mean, multiple times in this market where people have literally moved crypto from one wallet to another and the price has dropped. Oh, also, don't forget, we also had news, oh gosh, what was it? Was it 6-7 days ago, where Binance, one of their wallets, they moved Bitcoin from one wallet to another. Scandalous, I know. And then the price also fell from that as well. So, yeah, they're doing a very good job of making sure that prices remain in flux or volatile as they continue buying behind the scenes as well and continue to do so. Never forget, before ETFs, our market existed and it will still exist for as long as we have blockchain. So if we can move past the point of the futures 2.0 kind of thing, where years ago people kept on pretending every Friday as futures were expiring that we also had to go down in price, that would be wonderful because the market's still strong. People are still buying. And I say this in the lightest, nicest way. You and your friends might not be buying, saying it in a nice way, but understand $395 million over the course of a 24-hour period. There's still a lot of massive interest for Bitcoin. So that's the today. Somebody tried to say why Bitcoin's price was dropping. And what is probably not that reason, because that's reason number 95. Okay, that's the whale news. I don't know. Okay. Let's move on. Also in the news, back in the news, not talking about weird stuff that they were talking about before. Shiba Inu's back. Yeah, Shiba Inu's burn rate keeps rising higher and higher, and I literally don't understand math at this point. According to statistics from the SHIB Burn website, the Shiba Inu burn rate increased by 3,275% in the last day alone. Over 232 million Shiba Inu tokens were removed from circulation. A dramatic rise compared to just 1.37 million tokens burned the previous day. Yeah, Shiba Inu's back at it again because it keeps happening like all the time. Shiba Inu, I don't know, they're, once again, side note, we no longer have Dogecoin news. 2, we no longer have like burning Terra Luna news, which I also find like Terra Luna is not in the news at all. Like they're not even remotely there. Shiba Inu continues to be there. We had some other days, weeks ago, where what was the news? The person said they were doing something and some upgrade was happening, and there's another protocol. I don't remember. There's some of this. Anyway, yeah, cool, awesome. I guess it's nice to have them back. I was expecting more altcoin news. I still keep seeing a lot of people talk about Litecoin on Twitter. I see no Dogecoin talk at all. I'm seeing more Telegram also as well for some reason. Bitcoin and Ethereum are obviously always there, and depending on which corner you make a turn at, you'll start finding a lot of like Ripple and XRP news as well. But I guess once again, as always, a lot of the altcoins are probably waiting for a like significant boost in the market. That'll drag the news out. So cool. I hope these people get their 1, 2, 3, 4, 5 cent Shiba Inu. I feel like at this point they kind of deserve it. They're the meme coin that has stood the test of time by burning hundreds of millions of coins every single day. I think that is going to do it for this video. I do hope that you've all enjoyed. I do hope that you all are having a great day. Morning, afternoon, evening, wherever you are, wherever you might be, I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.